Hi and welcome back to episode number 7 of Richer in Crypto. My name is Rogier and today for the Fear and Greed Index. It went up 7 points but is still in extreme fear. If we take a look at the total crypto market capitalization, which now sits around 1.65 trillion US dollars, it's been stable the last couple of days. So since the beginning of the week, even though the Fear and Greed Index went up a little bit, the total market cap is still stable at around 1.65 trillion US dollars. There's a Federal Reserve meeting in March 2022, and the Fed might increase the interest coming in March for the first time. And the Federal Reserve will increase the interest in a couple of steps during 2022 and maybe even into 2023. Also to take on the inflation rates, the high inflation rates, because in the United States, the inflation in 2021 was 7%. And what you need to know about inflation is that a high inflation is not good for the market, because depending on the wages, if the wages don't increase, the purchasing power of the consumers will be less. That means companies will be less profitable, and that also has an effect on the stock market and of course also on crypto. And you might wonder, well, Bitcoin is a hedge against inflation. That is potentially true, but at the moment, as we can see with the high inflations, even Bitcoin is having a hard time. This means that the whole adoption process and stability of the crypto space and also Bitcoin isn't where everybody is hoping that it will be in a few years from now. So that means, is Bitcoin a hedge against inflation? Potentially yes. Has it proven to be a hedge against inflation at this point in time? Not yet. I want to show you two interesting charts from the Glassnode. And this chart is about Bitcoin active addresses and Ethereum active addresses. So you can see during the time from 2010 and forward how many active addresses there were in Bitcoin and there are in Ethereum. And you can see that both of them are nearly the same. So Ethereum gained a lot on Bitcoin, and Bitcoin active addresses sits around 1,071,000, and Ethereum is pretty much the same. The second chart that I wanted to see you is how many addresses have a balance of over 10 Bitcoin. And what's interesting to me in this chart, if we go back in time a little bit and you take a look at 2017, for example, the start of the bull run in 2017, which ended at the end of 2017, and then we have seen a huge decline in the total value of the crypto assets, the crypto market capitalization. But you can see that the light blue line, which is at the top, has been pretty stable from 2017 onwards. This means that most of them were hodlers and keeping on to their Bitcoin. And also most of them, because only 151,000 addresses with over 10 Bitcoin. This means that 14% of the total addresses hold over 10 Bitcoin in their account. This can also mean that one person can have multiple addresses with over 10 Bitcoin. This does not mean that there are 151,000 unique people alive holding 10 Bitcoin. It can be less. So it's been stable over the last 4 years. That's an interesting conclusion. So most of the addresses out there, they have less than 10 Bitcoin, which is pretty reasonable because a lot of consumers who get into the market, of course, at the moment at the current prices, even at $40,000, it's pretty hard to own a whole Bitcoin. And what does this mean for the longer term, for long-term predictions? Will there be more addresses with a balance over 10 Bitcoin? Well, if the price of Bitcoin in the future will keep on rising, it will be very hard to obtain a whole Bitcoin, let alone 10 Bitcoin. So of course, there will be a redistribution of Bitcoin when people are selling their Bitcoin to people or companies coming into the space. But this light blue line, we might see a slight decline, and to see an incline in amount of addresses holding Bitcoin. If the price goes up, it will be harder, of course. But if we go into the deeper bear market and Bitcoin will fall to $20,000 or maybe even less in theory, then there's a possibility we will see more addresses adding into Bitcoin if they see Bitcoin as a long-term asset, long-term holding asset for either to protect themselves against inflation or see it as an investment for future benefits. So now let's take a look at the Bitcoin chart and do some technical analysis. And right now you are looking at the Bitcoin chart on the monthly chart. As you can see, the potential double top pattern, which I talked about in previous videos, if Bitcoin falls below this, and I keep repeating this, 28,500. This is the bottom. If it falls through, it will go probably pretty fast to $20,000. And if that doesn't hold, of course, we are back from where we started. Now, as you can see, the month of January is almost over. There are a couple of days left, but we can assume that this red candle will remain red, because if it would go to green, there would happen, we would need some kind of miracle, and Bitcoin needs to gain some 27%, which in my opinion is very unlikely given the current market situation. Also, if we take a look at the volume, you can see that the volume has been declining. And over the last 3 months, we had 3 red candles. Well, this one is not over yet, but you can also see that the volume on the monthly has been in the red. This means that there's been a sell-off of Bitcoin. That's why this is not green. If the candle would be green, there would be more buyers, but now there are more sellers. So volume is declining. So for me, it's not very optimistic that this month will close in the green candle, and probably will be either around this level where we are now, 36,000, or even more close to the 30,000 level. And also, if we take a look at the MACD, which is the moving average convergence divergence, you can clearly see that on the monthly, there's been a bearish cross at the beginning of January 2022. And this has been a pretty long run for Bitcoin on the monthly at the moving average convergence divergence. In the bullish side of things, it's been 579 days above the orange line. And if we would go back in time to see how long it took if there was a bearish cross on the MACD, on the monthly, how long it lasted before Bitcoin got back bullish again, meaning the blue line ahead of the orange line. And depending on when we take a look at it, but let's zoom in a little bit so we can make it a little bit more clear. You can see that there was in December 2019, there was a bearish cross on the monthly. And then let's say when it broke out, it's 183 days was this period over here. And it was almost a horizontal period. And of course, we had the dip in March though. But looking at on the macro level, that you can see that the lines are, the range is pretty much between the 10,000 and the 6,000. So nothing spectacular there on monthly closes. And if we go back in time a little bit further, and we go back to the previous bull run, which ended at the end of 2017, you could see that we had a bearish cross in June 2018. And these are lagging indicators, of course, because you could see that a big part of the decline has already been set in. And we can talk about a decline before we hit the bearish cross of already 60%. So a very big part of the correction was already behind us. But from the bearish cross at the lowest, there was another 58% correction from that level. So the total correction on the previous bear market was around 84%. And then it took Bitcoin on the monthly moving average convergence divergence for Bitcoin to go back to bullish again. It took about a year. Okay. So it's about a year, and the other one we checked was around 183 days. So let's say that it will take less time, but maybe it will take 180 days, let's say. That will mean until the 1st of July 2022. And in my previous video, I stated that in the current market situation where we are still in the COVID crisis, where inflation is very high, and of course, the Federal Reserve and also in Europe, the European central banks are fighting on the inflation. So the interest rates will go up, but that will also have an effect on the stock market, and usually not in a positive way. The higher the interest rates, the worse it is for companies and also the stock market, and this probably also for crypto. So for the next couple of months, I'm still thinking that Bitcoin will go to the 30,000 US dollars and test that level and potentially go even lower, unless we get some very exciting, good news, great news on the crypto space. and also a lot of volume coming in, because that is what is needed to get the price moving in the upwards direction again. If we zoom in on Bitcoin on the daily chart, the thick red line is the bottom of the potential double top pattern, which is a strong bearish reversal pattern. This is the last resort for Bitcoin. If Bitcoin goes testing these levels, it needs to bounce, because if it falls through, we'll see even lower prices on the Bitcoin, on the crypto space. But if we take a look on the daily chart, and there has been 6 days on the daily chart where you can see that the Bitcoin is moving sideways, and the volume, there were 3 days of green candles. That's why we could see an incline in the price. But already we are seeing red candles on the daily, which means there's also a lot of selling activity going on. And this looks pretty weak to me. So I don't see in the very near future a upwards momentum. I think the chances are more likely that we will see a further lower prices for Bitcoin. And gradually it will go towards the $30,000 is my expectation for the next coming weeks. So if you're into dollar cost averaging, that's always a very good strategy into assets. But my personal opinion is to be very cautious on purchasing crypto at the moment. So if we measure the amount of time Bitcoin has been on a downtrend, it's 78 days now. So we need to see some kind of, the bleeding must stop, because you can keep buying yourself into crypto, buying the dip, and in the end, you won't have any money to buy the dip. And when the bottom sets in, it could potentially be the bottom, but it doesn't have to be. So my strategy for the next 6 months is that I need to have fiat or stablecoins. So when the dip sets in, either it's at the level of $30,000 or maybe even lower, around $20,000. And then we need to get a strong bounce. We need to get volume. And if we get volume and we get good news on the economy, inflation, COVID, those are the kind of news that we need to really search for the bottom. And then we will get the best price for crypto. So then crypto can then move on to 5 trillion market cap in 2023, perhaps, maybe even higher. But at least the whole crypto space would need to be able, Bitcoin above 60, 70,000 US dollars again. But at the moment, of course, we are a long way from home. If we measure from 30,000-ish level, this is 28,765, back to the all-time high, Bitcoin would need to gain 139%. And 139% gains are not impossible, because if we take a measure from the low here in July 2021, and we measure it to the top, there was a gain of 135%. And if we want to know how long did it take Bitcoin to get there, it took 112 days. So time is on our side. We need to be patient, but we also need to keep watching the economy, macro level economy movements globally. So make sure you are subscribed to the channel. Leave a thumbs up if you like the content. We have reached the end of episode number 7. I want to thank you for watching, and I'll see you in the next video on Tuesday. Have a great day. Thanks for watching again, and see you soon. Bye-bye.